Ed, welcome back. It's been a couple of weeks since both the world and U.S. stock markets were badly shaken by British voters' decision to leave the European Union, otherwise known as Brexit. Outside of England markets, though, we find that everything is pretty much recovered now, including U.S. markets. But enormous uncertainty and jittery nerves remain around the globe and here as well. British voters, driven by anger over a large influx of immigrants from war-torn Middle East nations and numerous terrorist attacks, drove many British voters to choose to leave the EU. But the country's economy has taken a huge hit, and companies who trade with Britain and investors who have money in England and the EU are wondering what to do next, even as England stumbles forward amidst a leadership vacuum. Joining us now is a Long Island wealth manager and financial advisor, J.J. Burns, head of J.J. Burns & Company on Long Island, been there for more than a quarter of a century. Welcome to the show.
Thanks, Richard.
First of all, were you shocked by the Brexit vote? We all know the pollsters and many financial analysts said it would never happen.
After being in the markets for more than 26 years, nothing tends to shock you too much. Right. But it was a bit of a surprise to the markets, I think specifically the EU region.
Well, like I said, the U.S. markets have now recovered, maybe even moved up. Of course, that can change daily. But what effect does this have on Long Island companies who trade in Europe? Because there's some fairly large, sizable companies that do that.
Yeah, there are certainly companies that export to Great Britain, and specifically the European nations longer term could have some really knock-on effects that we don't really know about yet.
Explain how there could be effects one way or the other from it.
Sure. So let's talk about for the people in Britain who have now seen their pound sterling move down to nearly 35-year lows, a tremendous decline in currency. So if you have a currency in Great Britain that you're looking to buy goods and or services in America, it's going to take that much more pound sterling to be able to afford the products and services that you want to buy in America. So your currency gets translated into dollars, and what's happened since this crisis is dollars have risen and the pound sterling has actually gone down.
So now, what difference does this make to companies that have employees in London or in Europe? Are they rethinking how they're going to deploy their resources, and is that already happening in some cases?
To the average person, imagine that America has 50 states, right, and New York decides to leave the United States. That's essentially, and I'm kind of oversimplifying this, but it's essentially what's happening is Brexit is Great Britain saying to the other 27 member nations that we don't want to be part of this European Union anymore. So imagine now London is a financial hub. It's not going to be a financial hub anymore. It doesn't want to be part of the EU. So that would be the equivalent of saying, well, Wall Street is not going to be part of America anymore. Neither is New York, so we're going to exit that.
So does that mean you got to have like two approaches if you're a company trading with what was the EU with Britain in it, and now you got to have one strategy for the EU with your company and another one for England?
It's very possible. And these other 27 member nations are likely going to say, well, maybe the financial hub is no longer in London anymore. And actually there are banks that are now indicating, Deutsche particularly, that I think maybe we're going to transfer our businesses or our new businesses over into Frankfurt in Germany.
So they're going to move some of their employees out of the buildings in London and put them in Europe. That would have a huge impact on London's reputation as a financial center, no?
And not only, yes, it would. And not only that, you've got many people where real estate was pretty high and mighty in London. There were some small knock-on effects before this Brexit vote happened, but real estate was actually going quite a bit. So now you have a lack of immigration now going into, potentially the lack of immigration going to Great Britain, which means that real estate prices are likely to fall, and the likelihood is that there will be a recession in Great Britain.
Because some of these, as you say, people not coming in, because that's one of the big bones of contention there that drove this vote about the EU's rules on immigration, that, there have been a flood of immigrants to Europe, including London. But then a lot of these office buildings could go unrented and be empty. Is that what you're saying?
That's a possibility. It certainly is a distinct possibility. But there's also another issue that you mentioned about immigration. Eastern Europeans coming into Great Britain have had some of the best value of providing tax revenue to Great Britain. So that's something that the Brexiters actually didn't really look at, because this vote tended to be a vote of anger, not necessarily a vote of what is really best economically and fiscally for the economy.
Well, the part about the commercial real estate's important, important because I'm hearing some analysts say that perhaps that would benefit the U.S. Or even Long Island. How so?
It could, and again, it all depends on how things are going to play out, and that's really the unknown, which is the average investor out there that might be listening to the show. They're going to hear about a lot of volatility because there's going to be a lot of bumps and fits and starts about how this exit is going to happen. And by the way, is the exit going to happen at all?
Yeah, I mean, we don't even have anybody in charge over there right now, essentially. And the jockeying for position, nobody can gain enough momentum, and it seems like nobody wants to take the ball in a lot of ways. And so is it possible this could be reversed? I mean, there's talk about this Article 50. It hasn't been invoked yet, and until it is, it doesn't really count, does it?
Right. The likelihood is there's going to be some type of negotiated exit. Could there be, and interestingly, we had a call last week with Tony Blair, and one of the things that Blair...
You and other financial advisors?
Yes.
Like a teleconference, is
teleconference, other financial representatives, you know, people that have interest.
And he's the former prime minister there.
A
lot of people not happy with him over the Iraq War, so his reputation...
Certainly. Yeah, and certainly, you know, look, he has an opinion, but there was other economists on that call as well.
What was his opinion? I'm curious.
He indicated that it's quite interesting that now that the people have, and I'm quoting his words, that have infiltrated the Citadel, now that they're sitting in the middle of the Citadel, things may not look as rosy as they once saw.
Well,
and
that's never something an investor wants to hear, of course, when their money is at stake. So what should Long Island investors do now? I
think that they really need to take a good, hard look at their portfolio and say, is this something that I should be investing into longer term? Is this something that can be opportunistic on? And we sit in the camp that whenever there's volatility and uncertainty, there's opportunity that is abounding. So I think one of the biggest questions that many Long Islanders have is, should I have part of my portfolio invested internationally? That's really the big question.
So, and a lot of unanswered questions still before people can even fully make that choice, I think, in a lot of ways. But J.J. Burns, head of J.J. Burns and Company, thanks for the Brexit update. We'll certainly be watching how this all unfolds.
Thank you, Richard.
And before